As you track trade right now, I'd like you to answer, does software actually play any role in any of this negotiation?
Yeah, I think it plays a really significant role in this negotiation, right? Because as we talk about AI and the importance of really being a leader in this space, we know that the U.S. right now outspends China on a ratio about 5-1. But of course, there's a lot of accusations around distillation. And when we zone out from an economist point of view, it becomes a lot less about what's the marginal cost to China to produce a model, and more about, are we doing what we can to protect U.S. innovation? And it's really key that we get this right, because this is an industry that's estimated to translate into trillions of dollars in global GDP over the next decade.
So when we think about the actual U.S. names that get caught up in this, analysts are pointing to Cadence Design Systems, Dassault Systems, Synopsys, as well as being companies that might be limited in their ability to export to China. But more broadly, what is the biggest element that U.S. can bring to bear? It still seems to be semiconductor. It still seems to be the IP when it comes to GPU and compute.
Yeah, I would absolutely agree with that. Our power is really in intellectual property. We've shown a lot of resiliency there, a lot of leadership there. That's our key metric for, as we move forward, what we bring to the table, absolutely. And we'll have to sort of continue to lean into that and really have these conversations around policy to continue to lead in that space.
Right now, are you seeing any data, primary data or secondary data, from any economy around the world that tariffs in the technology context or export controls are damaging any industries that we're talking about here?
It's actually been really incredible. Tech has shown an amazing resiliency. Our global economy has shown an amazing resiliency when we talk about the effect of tariffs, right? And where we would anticipate to see it when we talk about especially these relations with China, we would anticipate it to see in consumer electronics. Now, the story of 2025 so far, and I wouldn't just say this for the U.S., but globally, has really been this idea of delayed pass-through effects. Now, as we get into the later half of 2025 into 2026, very likely that it's going to not continue in that way. Expect inflation to be persistent, really moderately accelerate as we go into 2026. So there will be an impact.
We're talking about the environment, and some of it is about headwinds and risk. Yeah, but actually, when I think about where your research is at, you're looking at M&A. Yeah. You're looking at investment flows. Deals are getting done, at least infrastructure-wise, in this country. Yeah. That's all quite positive.
Yes, absolutely. I mean, in many ways, the tech sector has acted as a macroeconomic stabilizer for greater economic growth, and it's been fascinating to see.
What's also been fascinating is how we discern where we protect talent or not. Look, there's been a lot of focus on H-1B visas. There's been a lot of focus on trying to make the US more self-sufficient with its own people. But should we be looking more broadly at who the AI talent is in some of these big tech companies and where they're coming from a national security and indeed an economic perspective, Natalie?
Yeah, I mean, it is such a fair question, right? When we take a step back, we see that overall the labor market has softened meaningfully. But when we talk about the specific talent around AI and machine learning, we see a lot of labor market tightness, meaning there's so much demand. So as we talk about H-1B visas and the overall impact, it is very likely that the demand is absolutely there for AI investment to necessitate global talent in this space.